Okay, welcome to Stock Talk with Nico Kritikos. Today we're going to be going over Penn National Gaming. And this video is dedicated to Jimmy Kritikos, who inspired me to make this. So, Penn National Gaming, this is not a company I own, currently trading at $52 a share. Earlier this year, it had highs of 136. And we're going to go through tons of analysis today. We're going to compare them to their competitors, and then I'm going to give you my price target for them 7 years from now. So Penn National Gaming is the third largest gaming company in the country now for over 10 years with over 44 facilities. Their market cap right now is $9 billion, and they own properties such as the M Resort, which is the Los Angeles Raiders hotel. They own the Ameristar, they own Hollywood Casino, and then as of last year, they bought a 36% stake in Barstool. And by 2023 or 2024, we should see close to 100% ownership of Barstool. I'm valuing Barstool but anywhere from $1 to $1.5 billion. And if we look at something like their Instagram, we can see they have over 12 million followers. So they have a huge fan base, and that's why I'm thinking the valuation would be somewhere over $1 billion. If we look at their earnings for Q3, we can see that they did revenues of $1.5 billion with net income of $86 million, net income margin of 5.7%. And they also said that last month they completed the acquisition of The Score, which is a platform that is the leading sports media app in Canada. They also had the Barstool app made available to 5 new states during Q3. And the only problem I see here with this company is that they're low in market share at the not in terms of casinos, but in terms of sports betting apps. The top 3 are FanDuel, DraftKings, and BetMGM. And the Barstool one is pretty down there. So that's the only problem there. And I went into this analysis pretty bearish. I didn't really care too much about this company, but after really diving into it, I've gotten a lot more bullish on it. So we're going to use Nico's stock market checklist and see what we have here. So first up on the list is the stock down over 25% or really over 35%. And yes, it's down 60% since its highs. So that one definitely gets a check. Net income growth and revenue growth over the past 3 years. Yes, it's been very volatile, but they did do that. This is a new one I added. I'm not sure if I'm going to keep this, but it seems like it has some pretty good truth to it. A price to sales that's no more than half of next year's expected revenue growth. And yes, they did hit this. I believe their price to sales, it's pretty low. It's under a 2. And they're expected to grow revenues only by 6% next year, but still, it gets a check. A low forward PE of 18. This we're going to use this graph I made here comparing all the other casino stocks like Wynn Resorts, Golden Nugget, Las Vegas Sands, MGM Resorts, and a couple other ones. So we can see that Penn's price to sales is 1.7. Their revenue growth is a little bit lower than some of these other companies, but we can see the forward PE is 18, and that's about average. It's definitely not bad, so we can give that a check. And if we look back at this, you can see a lot of these things are all over the place because of the pandemic really messed these numbers up with the profit margins, their growth numbers and everything. So that's why some of these say a 0 or a lot. It's just because the numbers are really off. Next up, does the company have a competitive advantage, and are they innovative? So I'm going to give this a yes for a couple different reasons, because they're getting into the sports betting apps, and that's definitely a good idea. They also, I believe their competitive advantages is that they are specializing in getting more engagement with their customers versus some of these other platforms. And the new CEO, Jay Snowden, he also talked about how he wants to get influencers like Dave Portnoy in there to help promote the brand, and that's going to help push that engagement. They also have been making tons of acquisitions over the past 5 to 10 years, and it doesn't seem like they're going to slow down with that. So I think that's also a good thing that's going to give them an edge, because I love to see a company making acquisitions. It just shows that they're consuming more market share, and it gives them more opportunity. So that's going to get a yes, and we can get more into that in a little bit. But how is their management team, and is it founder led? It's not founder led, but how I just said, it's the CEO is Jay Snowden. And I listened to an hour-long podcast with him, and I got to say, I do like him. I think he knows what he's talking about, and he sounds very optimistic. He sounds very smart about what he's doing. They sound very disciplined, very careful with the way they make business decisions over there. They said they aim for their new facilities to get about 10 to 15% of ROC. So that's good, but their ROC in the past couple months has been 5%, which, once again, it's not great, but compared to these other casino stocks, you can see that it's really just, it's average. Some of them are negative, some of them are 88%, which is a little bit of an outlier, but it's not good or it's not bad, but we can give it a check. I mean, really, I like to see over 10% though, so we can give this one a no, but I know that's going to be that could be a temporary thing. They could fix that once things get more back to normal. Profit margins of 7%. Once again, this is right in line with average. It's right along this 6 to 8% mark is normally where these companies are at. Las Vegas Sands had a pretty high one of 17%. I found that surprising. Wynn Resorts was 10%, which is good, but I was actually expecting Wynn Resorts to be the highest. And so we can give this a yes, even though it's average. I mean, a lot about this checklist is just like, it's just things to look for and keep in mind. Like, just think about, these are just things you want to think about. So it doesn't mean it's not set in stone, like if they have to hit a certain mark or anything. It's just, you want to be thinking about these different things on the company. How's the operating cash flow? It's, the past couple of years has been so volatile. So I'm going to give this a no. It's not bad because they've been growing it, but it's just been so up and down, and it's really hard to predict. So that's not very healthy. Is the industry growing? Yes. Sports betting. We know there's only about 26 states that have legal sports betting. And that's what that Jay Snowden guy really talked about, was how when these new states open up, that's going to give them so much more opportunity to expand their market share. So we know, he said it's not a matter of if, it's a matter of when. And so I think that's a good thing. So there's bound to be more users in the sports betting industry as the years go on. Right now, it's expected to grow 13% a year for the next 7 years, and casinos are expected to grow 7% over the next 7 years. So both of those things are bullish things going for this company. Next up, their balance sheet. They do have more assets than liabilities, both long-term and short-term. That both gets a yes. Is equity increasing? Yes, they have $3 billion in equity, and I put growing fast because just 3 or 4 years ago, they actually had a negative equity on their balance sheet, and now it's $3 billion. So that definitely gets a yes. Next up, share buyback or dividends with a low payout ratio. They don't pay a dividend, and they raised money last year, so they actually added 13% more shares. That's not good. This gets a no. Are hedge funds or big investors buying in? Well, hedge funds the number of hedge funds holding the stock increased from 568 to 581. That's a bullish sign. The CEO, he was buying shares years ago when it was $20 a share. So that he hasn't bought anymore, but he already had some. Diverse revenue streams. Well, they have casinos, they have hotels, they have their apps, they're in Canada, and they're in the United States, and they have horse racing. So these are all bullish things for the company. They do have diverse revenue streams. So this is going to get a yes as well. Now, so if we look through this analysis, we can see they have, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So they have 14 out of 17 on my checklist. That gets a pass. Next up, we have the revenue forecast for the sports betting industry. In 2028, it's expected to hit $140 billion. And based off the analysis I saw online, they're expected to have 13% market share is their base case. Their bull case is really like 10%. I want to say, no, 5% market share. And then their bull case is like 20% market share. So on average, they're expected to have $18 billion in revenue in 2028 just from the sports betting app. Then if you look at add on their casinos, their hotels, any more acquisitions they make, I can see $25 billion of revenue easy for 2028. Okay, that's 7 years from now. And so if we put this, my base case for this stock, if we put it at a price to sales of 3, which is pretty cheap, that's very fair. Tons of companies trade higher than that. Then that would put this company at a market cap of $75 billion, which equates to a $440 stock price. Okay. Now my bull case, if everything works out and they gain market share, they make more acquisitions, and everything goes better than normal, then we'll put it at a price of sales of 8. This is like what a McDonald's would trade at, or there's tons of companies that trade at these higher price to sales ratios. This would put it at a $200 billion market cap, which would be an $1,100 plus stock price, and that's in 7 years. So how I said going into this, I was not very interested or bullish on this company, but after looking at these numbers and the analysis, I kind of changed my mind. So I'm kind of debating starting a position in this, because it looks like this $53 mark is kind of attractive. I think it's very possible it comes down to 35 or 40, but 50 or 55 looks like a pretty good entry point. So I might have to make a position in this, but we will see. And if I do, I'm sure I will post about it sometime in the next couple of weeks. So here's their CEO, Jay Snowden. I forgot to bring him up, but he is this is the podcast I listened to. The host was annoying, but Jay Snowden, I thought he was great. And so yeah, that's pretty much it for today. But if I do end up buying this company, I will make a post about it. And yeah, I gotta say, I am pretty bullish on this company. So we will see what happens, and I will catch you in the next video.